Hey everyone, welcome to Clear Money Tea. Today we're going to be talking about CaspianReport and FE battery metals. CaspianReport, who does videos on geopolitical trends, uploaded a video about net zero by 2050 not being possible on July 16, 2023. It stated that the world needs more mines to meet renewable energy goals, and that one of the materials needed was lithium. Now, while sponsored videos aren't anything new, this video was sponsored by FE Battery Metals, a publicly traded company on the OTC markets with a focus on, you guessed it, lithium mining. These companies traded on the OTC markets, or maybe known as the pink sheets. They tend to not really have much information on them. They don't need to meet a lot of the SEC filing requirements. They tend to be illiquid. It's hard to find coverage on them. Putting your money in them is risky. So the question is, why would CaspianReport recommend this stock? And is it as bad as it seems? I'm here to tell you it is bad. It has all the hallmarks of a pump and dump scheme, and it's pretty disappointing that they chose to allow this company as a sponsor. So CaspianReport's subscribers and viewers had questions on this and were skeptical, and I'm here with some answers. Now, was it illegal for Caspian to promote the stock? In the US, the Securities Act states that it's unlawful to publicize a security without fully disclosing the receipt, whether past or prospective, of such consideration and the amount thereof. FE Batteries is publicly traded on the OTC markets. Now, Caspian did report that FE Battery sponsored the video, but didn't include the consideration. So we don't know how much they were paid and at what consideration. We don't know if they got a mix of cash and stock options, or if they just got cash, or if the stock options are contingent upon the price reaching a certain level. We don't know any of that. Thus, by Caspian not reporting the consideration that they received for this video from FE Battery, I would say it appears that they're in violation of the Securities Act. And as for FTC requirements, Caspian did disclose the sponsor in the video, as well as in the description and in the comments, though I would say it's a bit bait and switch because they included the sponsor at the end of the video, and given that the content specifically relates to the sponsor and the sponsor is a publicly traded company, I think that disclosure should have been made at the beginning, and which FTC does recommend as best practice not just to leave the sponsor at the end of the video. And just, illegal or not, it really colors the whole video. You watch what you think is going to be an informational report, but then when you see who the sponsor is, it now changes the whole context of the video from being informational to just pure sponsorship. The company is also traded in Canada under the ticker FE, so it needs to meet the CSE's requirements for being traded there. One of the requirements is that the listers of the securities, meaning FE Battery Metals in this case, should be listing the promoters who can sway the stock. And I would say CaspianReport, who has subscribers of over 1 million, and even this video was watched over 250,000 times. I think FE Battery should have disclosed the consideration paid to CaspianReport. And as for CaspianReport specifically, the Securities Act in Canada also has rules for those who engage in promotional activity. One of those rules is that you shouldn't make any misleading or false statements, and CaspianReport makes a lot of statements about FE Battery Metals in the video and just about, trading and the industry in general. If we listen to some of these statements or read some of these statements, you'll hear phrases like,
lithium is the trade of the decade, especially in North America. The best place to mine is near other mines. They are a prime acquisition target once they make a positive discovery mining-wise. Once positive drilling results are announced, what usually happens is that the stock skyrockets. But when the opening share is low, the risk is worth it.
I think a lot of these statements are problematic in their own right. He uses a lot of the term once this happens, but there's no guarantee that any of this will happen. He does kind of waver and say, well, there's no guarantees, but when you make statements with the word once this happens, you're already putting in a guarantee within the statement you're saying. Also, I think it's difficult for you to say that once the share price is low, the risk is worth it. So it's like, with what background are you stating that? And when you say things too, like when positive drilling results are in, the stock usually skyrockets, it gives the impression that positive results equals higher price and more money for investors. And I would say very coincidentally, the next day after this video was published on FE Battery Metals news section of their website, they released some positive statements about survey results on one of their mines, and it's one of their mines that's next to the Sayona mine, which is mentioned in the video. And this was just the 12th release on the news section of their website website for this entire year. And it just happens to coincide with this promotional video. So I think these could be labeled as misleading, but I'm not a regulator in charge of this. This is just my own interpretation. So I don't know. What do you guys think? Either way, let's get into this company in general and what's the other side of this company. We heard a lot of what FE Battery Metals have to say about themselves, but what are some of the other things that we see about this company? Okay, so there's a lot of red flags. Let's first get into a little bit of context. So FE Battery Metal reportedly does lithium mining exploration. Caspian reports that one of their mines is by the Sayana's mine, and it kind of gets you thinking, well, if they made a positive discovery, then, FE Battery Metals is going to be next. But what's kind of glossed over as well is that this mine by Sayana actually appears to have a lot of history. From what I see, it looks like this mine was actually discovered in the 1940s. And then there was exploration and, production started to occur in the 50s and 60s before production stopped. Quebec Lithium Corporation, who owned the mine, shuttered it in the 60s due to adverse market conditions. And then we hear around 2008, another company, Black Pearl Minerals, took over the mine, which became Canada Lithium Corporation, who became RB Energy. The mine ceased operations in 2014 and subsequently got acquired by North American Lithium. And then in 2019, operations ceased again. NAL, North American Lithium, filed for bankruptcy, production, and now we're at present day. Sayana Mines has acquired the project and is getting the mine back into production. Now, when you put it in that context, it makes you wonder if FE Battery Metals can be successful when one of their mines that is being touted by FE Battery Metals is next to a mine that has been known about for over 80 years. And since then, there hasn't really been any groundbreaking discoveries or mentions for further production by other companies. And as we see in this company, this, which is a $15 million market cap, and there's no commercial mining operations happening, so there's no revenue. You heard that right, zero revenue for the company. There really is only one commercial mine in Canada, which is the Sayana North American Lithium project. So this isn't really surprising, but if you don't have that context, you might not know that this company has no revenue. While they don't have any money, they're definitely spending their money, which brings us to the next red flag if you look at their expenses. Given that the company reportedly engages in lithium mining exploration, we would expect to see costs related to exploration, which we do see on their most recent financials. So in the most recent 9 months ending December 2022, we see that there is some exploration costs, but we also see that there is a substantial amount of money being spent on investor relations, which they then later in their filing go on to define as investor marketing programs. So they're spending a substantial amount of money on marketing, which in my interpretation means that they're spending money on marketing the stock. Instead of spending money on exploration, they're spending a lot of money on trying to sell the stock to you. They're also spending a lot of money on shareholder communications, which they don't really elaborate on. I'm not sure if they're buying printers or what's going on there. The Wiki for Mutual Funds defines it shareholder communication expenses as printing and mailing required documents to shareholders, such as shareholder reports and prospectus. There's no further clarification on FE Battery's documentation that I saw on what this means to them. So they either have really expensive printers or there is something else going on in this line item. All right, with this out the way, now let's get into our third red flag. So there's no money coming in. They're spending money on not just exploration, but also on just essentially promoting the stock. And so now the next question is, where is this money coming from? So the answer to that is partially you, or whoever is buying the stock, as well as private placements. And these two things aren't necessarily bad. It's just in the context of, hey, this is a company that there's little information on, there's little coverage on, there's not many requirements that they need to meet. So it's difficult, as an investor for this to be supporting this company and know that your money is actually going towards a legitimate company. But now when I put into context the private placements in context with the owners of this company, you'll feel even more hesitant about this company. So Gurmeeta Sangha and Craig Alford are the ones in a management capacity on this company. The company used to go by Cree Materials and then switch its name to Agave Silver Corp. Again, switch its name to First Energy Metals before finally becoming FE Battery Metals in October 2022. And honestly, none of this is surprising. This frequent name changing is another classic sign of a pump and dump company. It's not anything dramatically new with the company. It's just a way to market a new company. Yeah, and outside of promotional materials, things on the company's website, there's really not much you're going to find on FE Battery Metals. And as for their owners, what you do find is a lot of ties with other companies. But let's get into what we find on the owners of the company. So Gurmeeta Sangha, there's not much on Gurmeeta Sangha except that he has ties for a lot of suspect or failed companies such as Verana Development, Metron Capital, Enotech, and Beryl Energy. Craig also has a history with a lot of companies. He was linked with American Battery, where he was removed and reportedly sued for supposedly issuing fraudulent shares. It gets even more interesting too because Craig is linked to another Sangha, in this case Harpreet Sangha. Harp and Craig run Beryl Energy, which is the company that Gurm used to be attached to in a management capacity. Beryl Energy, shockingly, is another nano-cap lithium mining exploration company. Now with Beryl Energy, we can get some more information on private placements. FE Battery Metal also does private placements, but there's nothing that I could find in terms of who's on the other end of these placements. But we can get a little bit more of a picture on how these companies operate, and at least with Craig, who is in a director capacity in FE Battery Metals, and Harp Sangha, who appears to be related to Gurm Sangha, how they configure their private placements on Beryl Energy. So for Beryl Energy, you'll see a lot of private placements that have happened over the years. And for those who aren't familiar, private placements are a way of getting financing to the company. You drop your private placement, either you or a broker solicit investors for the placement, and you have an agreement for these investors in the placement, which can be oftentimes receiving discounted shares. In this case, we see a lot of repeating names for the private placements. So we see Harp Sangha himself, we see Europe Capital, Arab Enterprises, and Actus, and we also see Crown Bridge Partners. So those companies, they could be described as toxic lenders. And the toxic lender, as companies that participate in very diluted private placements with steep discounts of 70 to 80%. And how it works is that the lenders, they receive shares in exchange for giving much needed cash to the issuers, and the shares, they kind of have their vesting period, and after that they're able to be sold on the open market for a steep discount. So let's say Beryl Energy has a private placement with Europe Capital, and the shares that they get when they put them on the open market, Europe converts them 70% of the current market price, and then they can go ahead and sell it at full value. So really get that spread between the market price and the 70 to 80% discount. So a pretty great deal for the lenders, and I guess that's why the SEC deems them toxic lenders. And so the last two, Actus and Crown Bridge, those ones were actually subject to SEC litigation due to acting as unregistered dealers. So I think it's not really a stretch to say Europe appears to be doing something similar. Possibly we see the same thing happen with Europe Capital or Europe Enterprises as well. So either way, with all these private placements, it hasn't stopped Craig and Harp Sangha from running a plethora of other businesses. And remember, Craig is attached to FE Battery Metals in a director capacity. And so Craig and Harp are also involved in Verde Sciences, which is a medical marijuana firm. So completely different from mining. And the other two of them, they're involved in a couple other companies together outside of Beryl Energy and Verde Sciences. They're also linked with China Dongsheng International and Lithium Now. So yeah, I mean, the question to me is, why would you recommend a company like this? So you have FE Battery Metals, which has management involved in multiple other ventures, involved in a suspect capacity in some of these as well. There's revenue issues, there's there's questions on what they're spending their money on. To me, it's a question of why Caspian Report would recommend a security like this. And I think it's something that all creators should be cognizant and careful of, because it puts themselves at potential liability, and it also puts their subscribers and their viewers at risk if they decide to purchase shares in a company due to a very one-sided viewpoint. Thanks for stopping by. I hope this provided some more color. At the end of the day, this is also not a financial advice. I would advise looking in further into everything I said. I think this is just serves as really like a starting point and really other end of the spectrum of how you can do some more investigation onto these matters, and also on why you should be careful. All right, thanks for stopping by. Please like, comment, subscribe.